Welcome to Silver Streak. How's it going, all my gold bugs and silver bugs, numismatic and precious metal enthusiasts and investors? As the third quarter has come to an end and we've started the fourth quarter, things are gearing up to the election, and the geopolitical and social impacts are affecting the economy. And well, certain people are going to take advantage of certain things, and I think I think a lot of things are going to come into light in the next couple of days. So as we see the driving forces of the world's economy pushing our beloved precious metals market around, we have things like the central bankers and the currency wars, and of course the White House out there dealing with the the crisis at hand, and of course the election. Big news, right? We got the elections going on, not only presidential but some of the governors and all kinds of things happening. So the game is in play for the fourth quarter. As we hear at the end of the third quarter, the numbers are going to come out, and you know it's been an interesting year. And one thing for sure is that Donald Trump has kept the magic going, kept the economy going. We've had a stable economy. The social situation has been a lot of unrest this summer. There's been a lot of upheaval. But that was, Trump very early in this whole thing. He put that in the hands of the governors to correct. And in the states where things got out of control, I think the people have to look at the accountability of their local governments and not so much the federal government, because the federal government was busy keeping America afloat, dealing with the two-party system that has been just the most toxic thing to America since the fiat dollar, anyway. And, Trump is a great strategist. He's an awesome economist. And one of the great chess moves is castling. And through castling, you can buy time. You move your pieces in such a way to avoid a checkmate or getting into an offensive defensive situation where it's better to play defense. And so I think that's what we just saw. I think we just witnessed a little castling move by the old president. I think by contracting COVID, whether he did or not, or whether he was just sick, and we'll find out later that maybe it was a false negative. Who knows? Who knows the story? But he bought himself a little time, and I think time is what he wants, because I see that he pushed off the stimulus now till after the elections, and that's what we're going to see. So the fourth quarter, we're rounding the door now. He floated us through the rest of the year, and I think after the elections, fourth quarter, I think you're going to see that stimulus. It's going to come from somewhere, somehow. This printing of endless money is going to affect the dollar, and I think the International Monetary Fund and other geopolitical forces that are pushing certain issues are going to come into account. And I don't think the dollar is going to be able to stand up. I think we're going to see inflation. And what is inflation? Inflation is a correction. And we all know that when the dollar falls and inflation kicks in, the precious metals, they take a rip. I do think we're going to see more of a dip, kind of like what Mike Maloney was showing us there, and that ABC wave. We actually, in the ABC wave, we're going to watch in a minute. I haven't showed the video yet, but yeah, there's a great video coming up. We're going to show with the next video coming up here, but we'll check it out. There's definitely, I think there's going to be one of these corrections where you look at the historical graphs and there's an up and down. It doesn't go one or two times, and historically there's a greater dip before there's a greater climb. So we will take a look at that, and I think that's what we're leading into. Yeah, so here he is. This was the video I watched today, and it's a fantastic video. They did some work with these graphs and made this interactive graph where they can compress the magnitude and duration of these runs, and it's really cool. So we're going to watch this, and we'll check this out, and this is a great video by goldandsilver.com, Mike Maloney. So let's get him going here. Let's see, just bear with me with my OBS. Okay.
Later on in this video, I am going to show you the most amazing chart that you have ever seen. And if you have any interest in precious metals whatsoever, this chart will make you drool, and you're going to want to forward this video to all of your friends. Anyway, I need to give you a little bit of background before I show you that chart. So I've generated this chart on stock charts, and it's the price of gold from 1970 until today. So it incorporates both of the bull markets. The famous bull market of the 70s in this red rectangle here, and the current bull market in this blue rectangle. And notice one thing right away. This rectangle here is very tall and skinny, and the current one is sort of short and fat. Now, one of the things that I'm going to talk about here, I'm incorporating this bull market all the way back to 1999, because the price of gold sort of put in a double bottom. But if you take from 1980 until today, the very lowest price was $253 in 1999, and then it was $256 in 2001. And so
boy, I'd love to see those prices.
1999 in this bull market. Also notice that these bull markets have a couple of phases here. Mm-hmm. This is what I call this an entire bull market. I don't break it up, but within this secular bull market, there is a cyclical bear market. And I call this a mid-cycle correction. I don't call it, I believe that this is one bull market. If I had any inclination of where gold and silver could go at the beginning of the 70s, I just would have been buying all the time, because I'm just not smart enough to trade these things and know that that is the peak when it comes, and sell or go short and then buy back in or go long right there and ride this up. And if anybody does, they're lucky. If they tell you they can do it, they're lying. It's not possible. You can measure whether gold or silver are overvalued or undervalued when you measure them against other assets. But trying to guess where the top is when they're sort of their value is not when they're still undervalued compared to other assets.
You can't guess the top if you don't know what the value is.
Tops is almost impossible. So anybody that was able to sell their gold in August 2011 or their silver in April of 2011, good for you. If you were able to buy back in December of 2015, good for you. You're better at it than I am. I use this whole thing. I know there's something wrong with the world economy and that we've got something really big coming at us. And I want to be protected from it and benefit financially from it. I am not looking forward to the world, the future as it's going to be after this next crisis happens. So we've noted that there's this three-phase cycle in this run-up, in this bull market in the 70s. And if you know anything about Elliott wave, I am not an expert on charting. I dabble at it, and I know that there's some different wave configurations. There's three waves, and there's 5 waves. This would be called an A, B, C wave. So you've got the A wave, the B wave, the C wave. Notice that the peak of the A wave here and the beginning of the B wave is centered right in the middle of this rectangle in both time and in magnitude. And here in this blue rectangle, it's way up near the top. Actually, I drew the top of this blue triangle up too high because it goes way further past this price, the peak price, than it does here. So it's way near the top, and it's a little bit over toward the right side of the price action here. Now, if we were to put that in the dead center, that would mean this rectangle would go way up here and it would go a little bit further out. And so if that were the center, and you took this A wave, B wave, and C wave, the end of the C wave would be way up here somewhere. And so with that Elliott wave analysis in mind, and the fact that we're picking the beginning of this bull market as the very lowest price between 1980 and the year and today, which was $253 in the year 1999. It was $256. This is slightly higher in 2001. So for Elliott wave analysis, I'm picking the absolute lowest price between 1980 and today in this cycle. And so we're going to go to the other chart now, the amazing chart. This was put together by my chart guru, the chart master, Alan Hibbard. And you're going to find this absolutely amazing. So what we've got here, I'm going to go back to the other chart for just a second. Notice that this is on a logarithmic scale. From 100 to 200 is the same distance as from 200 to 400 and 400 to 800. So we are measuring the percentage of change with the, if the price doubles, then it'll be the same distance for the next price doubling and the same distance for the next price doubling. So we're not measuring the amount of change, we're measuring the percentage of change, basically. So we go back to the amazing chart, the chart that will make you drool. You got to watch the rest of this video. And this is also logarithmic. And what we have here is on the bottom scale, you've got the 1970s bull market from 1970 to 1980, and from 35 bucks an ounce to 800. It actually peaked at 873, but the scale goes to 875. And so in that bull market, we went up 25 times the original price. Now here, there's a question mark. Is it going to be 36 times? So there's something amazing that you're going to see here. Now up here, we have the scale of the current bull market, and this, you'll notice, only goes to 2009. And then from 250, this is also a logarithmic price scale. But Alan made me these really slick little tools here. I can compress the timeline, and I can expand or compress it, and I can expand or compress the magnitude of this move, the price. And so let's compress a little bit of, this is going in 10% increments of compression. And so what we're seeing here, there is the peak of that A wave. And what I'm going to do is line it up with this peak, the highest price of the A wave of the 70s bull market. And that requires 2.42 is the number that gets them to line up exactly. And so I've got to change this from 0.1 to 0.01 now. And there's 2.42, and these peaks are exactly lined up, as you will see in a second. And then I'm going to start compressing the price scale, and this amazing thing happens, and when you get to 1.8 times, they line up exactly. And look at this. This is, like I said, Mark Twain is often quoted, but there is no evidence that he ever said this, but he is said to have said that history never repeats, but it rhymes really well. And then Eugene O'Neill said that there is no past or present, only the future happening over and over again now.
Yep.
And
I like
look at the correlation here. This is like totally insane. The correlation in the 70s bull market and today's bull market is just absolutely scary. This is so spot on. I didn't have a correlation run on this, but this would be in the very high 90, the 0.97 something or 0.98 something, or I have no idea, but it would be almost a perfect fit. And we're actually where this includes the price data to the end of last month. So to September 30th, I believe. And we are actually a little bit lower than if this was history repeating, we'd be way up above 2000 right now, and we will be in the future. So if you're watching this in the future, sorry, I just dated the video. But we've got a long ways to go. And this is suggesting that the target date, that if history continues to repeat so exactly, that the target date will be November 9th, 2023, so sometime in late 2023. But wait, there's more. I'm going to delete something I did here to cover that up. The price target is $11,250 per ounce if history repeats. We've just got this greatly amplified echo of the past. So it's taking...
So how cool is that? $11,250 goal by 2023. I think it's possible. I think history is, like you said, history repeats itself. Future proves past, past proves future. We're looking at it. Even the way social and economics are. We look at the time histories we went through. We went through something similar to this too. If you go back to the 70s with rioting and race wars and the controversial presidential assassination and the fiat dollar and all that good stuff. And you look at now and it's high drama on the high seas again as the central bank pulls the Federal Reserve pulls this narrative of, mass crisis and manipulating the markets any way they see fit. So very interesting video. I suggest you go watch it. I'll put a link below. And let's see. With that, we're going to say thank you to our friends over at Money Metals Exchange. If you haven't been over to Money Metals Exchange, go over there and check them out. They do a great job. They still have a lot of gold and silver in stock. And if you go over there and it's your first time, use the promo code SilverStreak. Purchase $100 or more, and you'll get a free half ounce of silver. It's one time, so if you've already got it, you can't get it again. And with that, I'm going to say thank you for watching Silver Streak.